Hello friends, this is the market on August 17th. The market is closed and this is Marv Eisen from Timeless Dollar Trading Academy, and you're saying to yourself, if I only sold up here and bought down here, I would have made a lot of money. But of course, looking at any chart in hindsight is a fool's errand because we have to deal with prices as they develop. And yet, we want to be able to be consistent as traders. So let me take you through it minute by minute and show you how to make money using what I know about how to measure charts and how to look at trades. And so the prices opened over here at 9:30 at 44.33. And of course, the previous close was down here at 44.19. And of course, because you are a trader, you know that looking at the chart, you always set up your chart using the previous day's close, marking that as a price target. And so the price target, or one price target, was at 44.19. Now, of course, again, market opened at 44.33, which gave you a 14-point potential gap trade. And so that was the first potential trade. And why did this trade succeed? And when did you get on? Well, the prices opened here at 44.33, and the high of this candle was 44.35 and 3 ticks. And as the day progressed, and this is a 3-minute chart, my friends, with 5 points between each horizontal line. So let me take you through it and to explain to you when to get on the gap trade. As the day opened at 44.33, prices basically dropped and then tested the high at 44.35. And here in this candle, the high was 44.33 and 3 ticks. Never reached the high of 44.35 and 3 ticks. So at this point, when this candle was formed, we could take it to mean that it was likely we could get on with reasonable assurance and with minimal risk. What do I mean by minimal risk? Well, if you got on over here, let's say at 44.32, you got on at minimal risk, 44.32, and the high of the day was 44.35 and 3 ticks. Well, if you got on at 44.32 and prices took out the high at 44.35 and 3 ticks, let's say 44.36, that was the risk. You'd get out with a small loss. But knowing that, or seeing that prices didn't take this out when they tested it, this was the point around here in this candle at 9:42. This is the 9:42 candle. Again, these are 3-minute candles. This is the point to get on for a potential gap trade. And so the gap filled here at 9:54, filled momentarily and then went back up. Okay, for the most part. Of course, they filled later in the day, but we're talking about this candle at 9:54. So the gap trade succeeded at 9:54, and the entry was somewhere around here at 44.32. And so that was why to get on, and that explains the risk of just a few points. All right, so let's go forward. We made our gap trade. We made our gap trade at 44.19. We got on at 44.32. So we made a 13-point profit. Nice, okay? And so we got off here. Why did we get off? When the price hits the targets, you get off. For the next half hour or so, prices traded in a consolidated range between 44.28 and about 44.20. And so there's no indication of what to do here. Prices briefly traded below the previous day's close, traded a bit lower, then came above the previous day's close. And I want you to notice right over here at the 12.27 candle, prices put in a high of 44.27 and 2 ticks. All right, then they went down to the previous day's close, went back up to, again, 44.27 and 2 ticks. Notice these two candles, this one here and this one here, exact same price. They did not exceed, one did not exceed the other. The 1300 or 1 p.m. candle did not take out the price of the 12.27 candle. So where do we go from here? So then again, prices again went down and hit a target at the previous day's close. So where were prices going there? So now we put our tailored trading zone into practice. And so we are looking for where the market is likely to trade today. And the Taylor Trading Zone, and I'm going to show you the calculator, the Taylor calculator gave an indication that prices will trade in a 45-point range today. See here, here's my calculator, 45-point range is where prices are likely to trade according to Taylor's calculations. And these calculations are represented as this rectangle on my chart. And so we know that prices never came near the intraday high. And from there, prices traded down, and look right over here. See, the intraday low was put in at 12 o'clock, or just after 12 o'clock. Intraday low is about 44.11. And so we're looking to see if we can find the intraday low or high. So the intraday low was put in at about 44.11. The intraday high was up here at 44.35. And so we're waiting to see if prices test either one of these levels to see which one stands. And so at 1:45, prices dropped down and took out the intraday low that was put in at 12 o'clock, took that out at 44.10, okay, at 12:45, 1300, 1 p.m., 1:30, around there. And so this is an important point to watch. Now, there's another target here at the Taylor trading support at 44.08. But we know that the prices are likely to put in a range of 45 points. So at this point, at 1:30, is it likely that prices were going to rise and take out the intraday high at 44.35 and 2 ticks? Very unlikely that at 1:30 prices were going to rise and take out this high. So that means that this high was going to be the intraday high. And so knowing that this is going to be the intraday high at 1:30, and knowing that the trading range of 45 points is going to be pretty accurate, what we're going to do is take our trading zone and transpose it. I'm going to clone it, and I'm going to transpose it with its 45-point range down to the intraday high, which was right here at 44.35 and 2 ticks. So right here is where the intraday high was, and right here, this is a 45-point range, my friends, 45-point range where my cursor is traversing. And so it tells me that the market should trade down to about 43.89. So right around here at 1:30, at 1:40 actually, where prices took out the previous low, we could see that prices are likely to fulfill their 45-point range. And from there, it became possible to determine that prices were going to trade down to here. So hopping on over here, prices were going to trade down to 43.90, and that's exactly where I got off. And it was a very profitable day, and this is how you should trade. Use the Taylor Trading Zone, use the intraday high or low levels, use the gap trade, and you'll be successful. And so that's my video for today, Thursday, August 17th. Thanks so much for watching. Trade safely, use lots of patience. This is Marv Eisen for TimelessDollar.com, and I'll see you in my next video.